Hello, my name is Tom Waite. I work at JLL on the European Logistics and Industrial Investment team. We have a network of about 55 capital market specialists in the logistics sector across Europe and a team in London which links that up across border, bringing capital into the market and doing deals across all those markets.
Good afternoon. My name is Jack Cox. I'm head of capital markets for industrial and logistics at CBRE. Pretty similar to Tom, really.
Very good. Yeah.
Hello, my name is Umut Ertan. I'm in the industrial logistics segment since 1994, so 23 years, and I'm founder of Logisitcs and Shareholder, which is a brokerage business, but I'm representing today and in speeches like this today the RLI Fund, which is a pure logistics fund, Core Plus profile, but I don't to make too much promotion about it, but we are quite successful. Last year we were the most successful investor in Germany, investing in 350 million euros in this segment. And yeah, we are prepared for the second fund, but now I want to give the microphone to Ian, and thanks for the invitation.
Hi, Ian Worboys, CEO of P3 Logistic Parks. We have 3.5 million square meters of logistics space in our ownership. We've recently been sold to GIC for 2.4 billion, and so the future's looking very rosy for us.
Very good. Maybe let's start with you. In terms of the overall themes that we've got, let's just pick up the German market for a little while, because you brought that up first of all. How do you see the market at the moment in terms of the political risk side of things that have been a large part of the discussion? Is that influencing anything at all in terms of the logistics side, or is that not really implicating it? Has there been a boost for Germany?
Okay, so Germany figures 4 billion transaction volume in the logistics sector last year. It's growing. And it's growing since 10 years in a row, so it's not anymore a niche. It's the second biggest class, and I would say probably every country reclaims to say we are in the middle of Europe. But I think geographically, if you count, let me say, Poland as the border to Russia or the Ural, I would say it's in the geographically middle of Europe. It's 80 million people plus. It has the highest density in the Rhine-Ruhr area in regards of population in Europe. So the best infrastructure, probably not in quality of roads, but it's very good build up. And we have harbors, we have Hamburg, we have Duisburg. So I think it's an important location, but not the only one. The next biggest is France, with half of the turnover regarding the take-up per year. And also regarding is in indexes regarding the proximity Germany is getting, and also the logistics sector always is meant to be the #1 location in Europe. But we say there are of course another very good countries in the neighborhood of Germany, which are, in our point of view, especially Eastern European countries, which are very attractive for investors also, and probably also for us in the future. The German political situation in the moment has not so much influence on the logistics market. So the market is still in a very good mood. We have absolutely much more demand than we can fulfill the requirements of the tenants. Speculative buildings are built again since 2-3 years, and they are all good working. It's not the crazy times like we had all in 2007 and 2008, where it was much more built than the demand was. So the developers are today much more secured, because a lot of end investors are stepping in the deals on a forward purchase or forward funding basis, so they don't have the risk if the market crashes down by, like in 2008, like after Lehman. So this is another situation. We have, of course, a very high price level, but what is high? We are coming from, let me say, in 2007, the highest multiplicator was 17.5, so it's 5.75%. This was H&M building in H&M building in Hamburg, and this building last year with 8 years less of lease. It was a 15 years lease in 2007, achieved the same pricing. So we were 8-year shorter lease. So imagine, so it comes down, and even these prices came down more. So we have about 5% for supercore or trophy properties in Germany, but these are more specially MechZB, mechanische Zustellbasis. It's more, let me say, a micro logistic hub from DHL, preferably, or Hermes, or whatever. And when they offer 15-year contract, it's for me, it's more a bond, because it's not just a real estate transaction. You cannot say this is a real transaction, and the yields are at 5% in Germany. So they're about 5.75, 5.5 for really good properties, and about, let me say, in the core plus segment, you can also get something around 6 still. But I want to give the microphone further. I think this was first reaction on your question.
That's good. Ian, I'd like to pick up with you just some of the, we held this same event last year. What are some of the bigger changes that you've seen? Obviously, personally, in terms of GIC, that's been a big change for P3. But in terms of the market, what are you seeing? Are any of those more geopolitical risks impacting yours in terms of what may or may not happen in the UK? And is that influencing in any way your investment strategy?
I think that as an investor, you have to look at the political situation in every country. And if we look at somewhere like Poland, which has been really steady and safe, while now there's more concern in Poland about what's happening there. Hungary used to be on the risk factor. Now all of a sudden they're bringing taxes down. They're trying to encourage more people into Hungary. So each year it seems to change. I mean, France, Germany, if Angela's not there anymore, I think that could cause a bit of a dip in the market. The French seem to be hell-bent on doing almost the equivalent of a Brexit and getting Madame Le Pen in there. So all of these things will affect. Will they affect us? The great thing in logistics is that you still need the same amount of logistics. Whoever's in government, the problem is, do people then have money to spend on goods, which will increase logistics? So for us across the board, we look at all factors to work out where we're going to invest. GIC, they find some countries more perplexing than others. But people like Spain has been really in the doldrums, is picking up. Italy, which has got its own political problems and tax problems, VAT problems, demand is picking up. But generally across Europe, demand is strong. So it's a pretty good market. We're happy, GIC are happy. Our new owners, Singapore. So in that point of view, it's the market for P3 is looking very good. Strong demand really across Europe at the moment.
Okay, good. And Jack, in terms of what you're seeing across the market, logistics has essentially been quite hot in terms of in the investors' intentions for the past 3 or 4 years. Is that something that you see will simply continue for the moment because of the fundamentals of the market?
Yeah, I think it is. I mean, yields are tighter than we've seen for some time, and in many cases, ever before. But I think a yield is a really kind of a meaningless percentage number, and it really needs to be seen in the context of risk. So when we look to the geopolitical environment, we see risk out there. But when we look to the occupational side of the story, we've never seen a more robust market, and I think it's really important that as advisors and investors in the sector that we have a clear mindset on what is on the difference between the politics and the economics. Politics is short term, it's noisy, it's distracting, but the economic fundamentals are absolutely set fair for our sector. And this time around, the capital markets, they're not being driven by the availability of cheap debt, but debt is cheap. They're not being driven by the availability of high LTV, but for the right borrower, LTVs are very healthy. It really is an occupationally driven story. So when we talk about very sharp cap rates in say, Germany, I think it's really important that we see those in a risk-adjusted context. And when the systematic risks of a country like Germany are low, and when the occupational risk, the potential downtime is as short as it's ever been, there isn't the threat of speculative development coming into the picture to expand the downtime, then I think there's a really strong argument that cap rates can compress further, and that's without help from strong rental growth, which still remains pretty muted in most markets. So, in summary, Richard, I always look for I calibrate risk in terms of record high rents and record low yields, and we're not seeing that combination in the market. So I'm a definite advocate that there's more room to run.
Okay, that's good. And Tom, maybe I'd like to pick up with you that topic in terms of the rents. What's happening at the moment? What are you seeing in terms of rents? Are there particular countries where there's more room than others in terms of increasing rents? What's the position?
Yeah, I think I'd agree with Jack that there's the promise of rental growth. There are market fundamentals which should point towards upward pressure on rents. We're at an all-time low vacancy rate across Europe. Development's been happening and is going to carry on happening. Majority on a build-to-suit basis, so spec is definitely happening, but it's not flooding the market. So the fundamentals for strong occupier demand, low vacancy, controlled supply should point to rental growth. We need to see it coming. I think some markets where we've seen it more acutely are somewhere like Spain, where rents probably fell a little bit further than in other markets, and there is some pressure on locations in and around Madrid and Barcelona where we have started to see those increases. But it's mixed across Europe. I think it can and it should and it will come, but it just depends on the micro location you're in, the need of the users in those markets. But the fundamentals are definitely there.
And Ian, maybe coming to you in terms of that sort of spec development versus build to suit, what's happening in your part of it? Is there more potential now than speculative development than before? Is there room for that in the market increasingly, do you think, over 2017?
Yeah, I think what we've seen is a sort of two-tier market where rents for build-to-suits have actually been lower than existing buildings. And if you take that logic forward, it means that if you then have spec buildings, which are there, which people want to move into quickly, people will pay slightly higher rents for those. So as a policy in P3, we always have a certain amount of spec under construction. So far, I've been very lucky in places like Slovakia and Czech Republic and others where, and in fact in Romania especially, where we've built 40, 50,000 square meters spec and they've been let by completion. Going forward, we're going to be probably building 50,000 spec in Gottfriedling in Germany. And that's our confidence in the market. But you're not seeing overall a huge amount of spec. It's not like 2000 to 2006-07, where Prologis would buy a site and immediately build spec, not knowing who would go there. Nowadays, everyone is a bit more circumspect, and they're just holding back before committing to go into spec. But it's something that will happen. There's a bit more of it. Every developer is doing a little bit more, but it's not ridiculous. And what we're seeing is in some key markets, like the Czech Republic, in Bratislava, that actually the available space is about 3% of the market, which, if you turn that into how many months supply there is, that's about 3 months supply. So there's a shortage everywhere. And coming back to what Tom said, we're seeing rental growth because of the shortage. We're able just to push rents a little bit more on each building. So Czech Republic and our site at Horní Počinice, we've seen probably around 6% rental growth. But that's on existing buildings, very different to build-to-suits.
Okay, good. I know that you are currently only invested in Germany, but are thinking about looking further outside of Germany in terms of different countries. What's driving that for you? Is it that you see that there's opportunity there, or is it to diversify? What's the aims of that, and are there particular countries that you're looking at?
It's a good question. Yes, I think we have the possibility to follow with our clients, meaning with the tenants, to for example, in Poland, 30% of the demand comes from German-based companies, or at least companies probably which have a headquarter in Europe, which is then based in Germany. So the decision-making many times comes from Germany, and we see a good access to this demand through our activities in Germany. and that's probably that's why we think about looking and opening the umbrella or the glasses and saying, okay, what's around, and we will be very selective. We will grow step by step. Our investors of the fund are also interested in pan-European transactions and diversity, as you mentioned. It's right. So this is a perspective which we, of course, see. Some investors are directly invested in or through other vehicles. In just an example, in the Nordics, and they had to pay for some swaps to solve the currency much more or as much that even the higher percentage of the income, the higher yields, after the payment of the swap come down below a level in Germany. So on the first view, if you look to the deals, it looks good. But if you want to solve the currency, if it's not in the EU or meaning in a euro basis, so this is something which some find out also. Some want to go back to Germany, but some others say after the political situation is clear in France and in September in Germany, it should be that Europe stands together, hopefully, and then the political risk out of such an expansion of our fund will be solved or more clear. Never completely solved, but I think clear enough, and then we want to go the step. Until then, we focus on our second German fund.
Okay, good. It's quite interesting. We did a couple of sessions on risk, but also on human capital, and a lot of the views that we've been getting here have been much more about, well, there's now just risk, political risk everywhere in a way. And so that's why we did a session in Budapest a couple of weeks ago where actually nothing has substantially changed in the Hungarian market, except that everybody now believes that at least that's going to be reliable. You know what you know what's going to happen there. So, you don't need to build in risk. It's what it is. It would be good just to pick up with you, Jack, in terms of, you mentioned the economic fundamentals. The other part of driving this is, what do investors want? Do you still get the sense that for the logistics side, this is a lot of investors who've previously maybe been looking at bond-like returns, so stability of returns, that are looking to come into this sector?
Yes, I think investing in logistics is a much less emotional activity than, say, investing in prime CBD office or a trophy shopping centre. So it is driven by the fundamentals, and I think you touched on the bond-like characteristics. It's something that I think we can all be very proud of. What our sector delivers in terms of the stability of the cash flows that it offers, the low volatility, the weak correlation to the other major asset classes, particularly the short-dated returns in cash, bonds, equities. But I think the relativity to bonds is critical. I think it often goes overlooked. And if we cast our eye back from over maybe a 20-year period, there's a really sharp correlation between prime logistics yields and BBB, just investment-grade bonds. There's a spread, but the correlation is very tight, or at least it was until about 2012. That's when we saw the corporate bond rate really fall to the floor, and this prolonged period of super low interest rates. So I think investors are continually attracted to the sector on a financial basis by what you can make a very clear case for sort of 400 to 600 basis points spread against investment-grade bonds, and then there's an illiquidity premium to be carried by physical real estate, but you have a physical asset, and you have a typically across Europe an index-linked income stream. So there's a degree of inflation hedging. So I think just in the pure financial fundamentals, that's an excellent argument. And then when you start overlaying the occupational trends and the e-commerce, innovation of the types of buildings themselves, innovation of the supply chains, and the types of demand that that Ian's referred to seeing in his portfolio, then you get a really pretty bulletproof sector. And no sector will be immune to rising interest rates. But I would argue that the logistics sector has the biggest capacity to absorb those upward movements.
Good. And Tom, I mean, given that part of it, we've seen GIC come in here. What are we seeing in terms of the types of investors, the types of capital that is beginning to look? Are we seeing new capital coming into the market?
Yes, we are. We've seen new capital been looking at the European market for some years now, and I guess there's a further wave of money coming into the sector, but it's multi-tiered. I mean, there are further band of Far Eastern investors looking at how to get exposure and get their foot into the European logistics market, and they're attracted by, as Jack said, the returns, the stability, the drivers of demand. We still have North American money, but a huge driver is still actually domestic money. So there's still, in major European markets, domestic money who are looking at real estate as an asset class. So they're comparing logistics, retail and offices, and then alternative sectors too, and are, again, attracted by the returns they can see, attracted by the ability to grow scale and then have relationships with tenants across different micro markets or even borders. And so what's making us busy and what is currently making demand outstrip supply of investment deals is the fact that there is that sort of multi-wave of investors looking to get in, some of whom are present and looking to grow, and an increasing number who are sat currently on the sidelines looking for their entrance into the European market. And I think we need and want more bigger platform deals available for investors to come in and do that.
Okay, good. I wanted to pick up with you in terms of, I mean, you both mentioned the occupiers there and the fact that a lot of the buildings are being created with specific occupiers in mind. Are there particular trends that you're seeing in terms of what you're needing to put into buildings, what both the investors are looking for, but also what the occupiers are looking for, whether that's more sustainability or whether that's the positioning needs to be closer to a workforce or closer into towns, or what are the trends that you're seeing in?
I think that we're seeing the two or three things. Sustainability has always been important, but sustainability will only work if we can show our customers, our tenants, that we're saving them costs. If we say we'll put up windmills on the roof, but it's going to cost them more money to service those windmills, then they don't want to know about it. If we can show them, as we've done with many of our occupiers, that we can actually bring their operating costs down in service charge, then, and that therefore is going to bring their running costs down, they can make more profit, then all of a sudden they like green sustainability features in the warehouse. So I think that's important. I think on what we're seeing changes, we're already having now to put in electric car charging points into car parks. So that's probably the most recent thing we've had to put in. On top of that, if you look forward, there's going to be a lot more artificial intelligence and robotics in warehouses. Amazon already have it with their multi-level warehouses, and there's a lot of demand out, I think, through CBRE at the moment. So you can ask Jack about that. But there's a huge amount of, that means better flat floors, maybe more power in the buildings, which could be covered by solar panels, but you could look at how you'd have to put power in the buildings. So there are changes. Fundamentally, a shed is still a shed. Sorry, a warehouse is a warehouse for the Europeans amongst us. For the English, a shed is a shed, and that's basically what we do is we provide a box around something that happens internally. We're seeing more automation. So again, power needs to go up. Automation is picking up everywhere. And although at the moment there's a lot of car parking spaces, if suddenly you are putting a huge amount of robotics into warehouses, you'll need actually less car parking. I think it won't be too long, 3 to 5 years, before we see automated lorries. That's going to bring some slightly different ways in which we look, because lorries will park automatically. So there may be some small differences there we have to look at, but no, overall, a shed is still a shed. That's why we love them. It's what Jack says about returns.
Good. And in terms of the German market, just give us an update, if you could, on what's happening in terms of e-commerce. Obviously, still the take-up for e-commerce is the biggest in the UK. Germany, the next biggest market in essence. What's happening with e-commerce? How big a part of the market is it?
Probably just to confirm what Ian said before, and there are two other factors which probably also are, I don't know how it is exactly in the CEE countries, but we see that the mezzanine space increases much more and more, which was 10, 15 years ago a nightmare to lease. and nowadays the clients ask more and more for a second mezzanine, a space where the reassembling, the repackaging, the pick-up systems could be handled for goods and for clients. So, and the resale if a client sends back the goods. So, and this is something which is probably a big trend, and then it will be in the future. We'll see more and more mezzanine space. Of course, the office partition comes down from 20 in the late 90s today to 5 to 10% maximum. So it's becoming lower and lower, the proportion between office and logistics. But coming back to the to your question, the e-commerce class is really the big driver in Germany. You know Zalando, for example, which is one of the biggest e-commerce developments in Europe, as I still think that's the truth. I hope there is no bigger so far. It was in Mönchengladbach and Leipzig, and they of course go through other countries in Eastern Europe, and this is just an example. There are much more, and I think in our company last year it was we had some specific demands from e-commerce companies for the fund business, but we are unfortunately only from 70 properties, there are only 2 units vacant. So I can say from this perspective, it's more the logistics sector still, which is the biggest share of the demand in Germany, which is automotive mainly, and all the suppliers around. And but e-commerce is becoming bigger and bigger and has increased rates of 15 to 20% per year. This is probably just exactly your question.
Okay, so you've got high potential growth there.
Yeah.
Good. Jack, in terms of interesting to note as well what e-commerce, if you're looking for much larger floor space, if you're looking to put in automated, I know there's a lot of automation as well going into some new ones that are being built in Poland at the moment. What's your sense of that in terms of what e-commerce occupiers are actually looking for and how that's driving the sector?
I think to understand what e-commerce occupiers and developers who are responding to that need to respond in the right way, I think you just have to put the customer front and center of the thinking. So customers all want their items delivered faster, sooner, cheaper, and more flexibly. So it's a scale game, and the Zalandos, the Amazons, the bigger players, they have bigger balance sheets, bluntly, and they can put more capex into their buildings, and that really is manifest in terms of automation. So very typically, in terms of the multi-story, multi-mezzanine buildings we see, if the build cost is 100 million euros, the fit-out cost to be in the order of 150 million euros. So they're very, very sticky buildings from the point of view of the occupier. So the fulfillment activities is very much a scale game. Fundamentally, it is. I think Ian touched on the multi-story phenomenon, and I think that will become increasingly mainstream. It's just a more effective, efficient way to manage inventory in the fast-moving consumer goods sector. It won't dominate the entire market, but it'll be a substantial part. And then, probably the biggest challenge facing logistics at the moment is the last mile, actually getting the product into the hands of the end purchaser. So that is these more mechanized, automated delivery units, smaller scale, thinner buildings, site coverage, 20 to 30% relative to a normal logistics warehouse of 45 to 55%. Greater construction cost due to the high density of dock level doors, and higher land price because they're located closer to the populations. So we've nicknamed this the dumbbell of demand. We see a proliferation of bigger units and a proliferation of smaller units on the edge of towns. A shed is still a shed, but there is, I think, innovation of the box itself, and also there's innovation of the processes that happen inside.
And in terms of let's drill down a bit more into the inner city logistics side of it, because I think that's an interesting topic. Tom, in terms of, there's been discussions that we've been having recently about, actually started partly in a session that we did in London earlier in the year, which is about what happens if you do then get more electric vehicles. It becomes quieter, and then if you're looking at inner cities, then maybe you can begin to have mixed use, which is urban logistics with residential on top, or with, you begin to be able to have some sort of mixed use. Do you think that's something that may well come?
I think it's kind of got to come. I think there's so much pressure on urban areas and the use of land and the use of space that I think we're not quite seeing it yet, but we're seeing such innovation from developers, from tenants, what they want, where they want it, that I think that's got to come. And I think it's all part of what's contributing to the logistics and industrial sector being bigger, being broader, being more in the spotlight of what investors want, because people do see the supply chain all the way from the big boxes that we've spoken about right down to, at the moment, the last mile is a cross-dock or a sortation hub close to an urban area. I think we're going to see that there are various different factors like emissions and like threats to that kind of thing, but there are going to be the need for smaller, more flexible, more dynamic boxes very, very close to the consumer. And as more people move into urban areas, there is greater pressure. So I think it's kind of got to come. We don't quite know what it's going to look like yet, but the pressure for space, for land, for tenants to be closer to what people want, and for people to want things immediately, means that our sector is going to broaden out, and what was previously an undesired kind of urban industrial building, and even if it's not modern, there's still a huge amount of demand for multi-let industrial space, and there's going to be more demand for modern logistics space very, very close to our consumers.
And that in a way creates more challenges for you in terms of how do you then predict what you're going to do with capex and with producing these different types of buildings. How far ahead do you find you're now having to look in terms of how you're going to meet those needs?
I think that for us and any logistics provider of space, you talk to your customers all the time. We hold conferences. We did one last year in October on the effect of robotics and artificial intelligence, and that allows us to look forward to see what changes we need to make. Likewise, we talk to the Zalandos, the Amazons, etc., to find out about last mile delivery and inner logistics development. And on the back of that, you can then see if you have either available space or it's something you should be looking at as a new part of the business. We're very lucky. A lot of our parks, for instance, in the Czech Republic, are very, very close to the city centre. And so at Horní Počenice, we already have a lot of people doing last mile delivery, including DHL, from one of our sites straight into the centre of Prague. But Prague's a very small city. If you're looking at a larger city like a Berlin or something, you'll need a ring of buildings around it. If you get to London, then I hate to think how many units you'd need to be able to provide in London to be able to deliver within an hour or even an hour and a half to people is probably over 100. So the opportunity is there, but for us it's looking at our customers, I'm sure as others do, talk to them and work out what they want, and can you then actually provide what they need.
And from your point of view in Germany, how long do you think before, I don't know where you are at the moment, certainly in London, it's not just same day, you can get it very quickly. What's happening in terms of Germany? Is that a viable solution, or does it mean that there's a huge amount of investment, as Ian said, that needs to come into those spaces?
Do you mean the demand from the clients?
Yeah, is there enough demand for it, and therefore how's that going to be met?
We had a take-up of about approximately 6 million last year in Germany, which is, again, a record in a row. So and the demand is extremely. So we cannot say another. We cannot find modern logistics properties. We have vacancy rates below 1%. In Munich, for example, in Stuttgart, you don't find even 10,000 square meters. Not one property. It's impossible. And this is something which will, from our point of view, it's even if the markets now would turn, and even so, if a crisis happens, and that's what happened in 2007, we should be really easy, because what happens? The production is not stopping at night when Lehman 2.0 comes again around the corner, because they still product. It's in they low down the production, but the storages have to be full then. So the lease contracts are not 3 or 5 years anymore, but they are probably just 12 months or 6 months. And we had in 2008, I think, about 60 leases in 1 year on the other side, and all were about 1 year, 2 years, and they were prolonged until 2010, and then they said, okay, I accept either again a 3-year contract. So logistics has a buffer of about 12 to 18 months if the economical situation happens like 2008. We have to say it. So of course everybody has it in the spec, and it's too long. It's already too much time has passed, and nobody is expecting something changes. But the fundamental dates and the interest rates are low, and they have to keep low in Europe, because otherwise the southern countries will not. Cannot exist anymore. That's the problem. So, and the problem on the one side, and the good thing for the real estate market. So, on the other side, I see the demand on a still substantial high level also for the future.
My name's Matthew Delaney, British but living in Denmark. I still call it a shed. From Copenhagen, representing Copenhagen Capacity, the inward investment agency for the Greater Copenhagen area, focusing on logistics. Interesting discussion about political risk. Denmark as a country has very low political risk. We've just seen investments in big data centers from Facebook, Apple, and so forth, in part because of the low political risk. It was interesting to hear when you talked about all the different markets, Greater Copenhagen wasn't mentioned at all, and not really the Nordics. My question is really, why or why not? Do you see opportunities for growth in the Copenhagen area? If yes, why? If not, why not?
I think the one thing is that Logicor bought everything in the Nordics, so there's no room for the rest of us. No, I mean, I think that if you look at population-wise for logistics, I mean, Denmark and that area has a population that needs serving, so there's always going to be a need for logistics. If you look at what we do, we sort of start from which we think is the centre of Europe, which we think is the Czech Republic. But from there, and you go out, then actually you serve a much bigger population. The main flows through Europe are still to the main populations of Germany and France. They're the biggest populations. That's where most of the goods are going to go to. And on the way, there are many other countries. And there's more manufacturing taking place further east. So you get logistics flows from the east going back to the west. And Copenhagen and the Nordics, in a sense, for size of population, is not. It's not saying it's not a core market in itself, but in European, it's part of the peninsula in the same way probably Portugal is, and Spain's dropped a bit in logistics compared to other places. What used to be the French croissant or the German sausage coming down has shifted across east. And if you look at where the major logistic parks are in Europe. Dear old Prologis, small development company, they did some research in, I think it was 2013, which looked at from the mid-2000s to 2013 where logistics centres were. And then they predicted forward to 2016, which we've just been through, and their prediction was right. And it used to be sort of 60% of logistic parks were in Western Europe. Now they're actually in Central, in Poland, Czech Republic, Slovakia. And that's still moving a bit further across, and it's to do with cost of labour, which is cheaper still cheaper in Central Eastern Europe, and I say in manufacturing. But I think Copenhagen certainly for us as a company we continue to look up, and that would be the next natural progression going in that direction.
I'm an unabashed fan of logistics investment in the Nordics. I think, as Ian said, it's not classically part of the pan-European supply chain. It's logistics for those countries, specifically. It was no surprise to me that when with the turbulence around Brexit, perhaps the two most obvious beneficiaries of those markets were Germany and Sweden. Sweden, there wasn't the stock on the market, but certainly we saw the appetite increase there. As for why Denmark isn't, we see less deals there. It's simply down to size of the market and availability of stock. Every time CBRE has a portfolio for sale in Denmark, it trades very well. Single assets trade very well. There's a deep demand, and I think if I look back to the last few larger portfolios we've done there, 3PL, sell and leaseback portfolio for Danske Factman. It's a 150 million deal sold to a UK pension fund, there was liquidity for that deal to be sold 3 or 4 times over at very comparable pricing. The same thing, just closed a deal in the multi-let, more urban urban logistics space. Comparable lot size, well over 100 million euros. Again, really decent liquidity for that. So when the stock is available, it will trade. If you build it, the capital will come.
Global trade at the moment is sluggish. We all know this, and there's not huge growth in global trade. And I'm just slightly challenging Jack's comment on bulletproof, even though obviously I come from the sector, in that so much trade at the moment is actually music is not being produced, it's downloaded. Books are not being produced, they're downloaded. It's all online. We're coming on to 3D printing and everything else like that. So actually, you could argue there's less need for warehousing of actual storing goods. It's going online. I just wonder what the panel's thoughts were on that.
If I was going to try to identify one disruptor for the sector, leaving aside the socio-political aspect, I would say it would be, to your point, Tristram, increased efficiency in inventory management, which is kind of what you're saying, I think, in terms of goods needing to spend less time on the shelves. Therefore,
They won't even be going through warehouse. They're not physical goods.
for sure, there will be certain parts, certain goods which are aligned with that, which can be 3D printed, which can be 3D printed and then assembled, on site. But there's a cost component to all of that, and I for one just see the need for physical inventory to remain on the shelves. There's also, whilst we can always push to the nth degree of efficiency, the consumer wants to know for sure that he's getting his goods.
Yeah, I was going to echo that. I think that the goods that you're mentioning, I think are small parts of the market. We are predicting further growth in demand for space driven by the way we shop, and there's still a very small amount. In the UK, 15 pence in the pound only is spent on online shopping. The rest is actually physical goods in the shop. So there is still a very strong need to store goods. I think that the demand for warehousing is going to continue to go up, and the parts of the market where we're going to make things which have less demand to be stored are still limited and outweighed by the amount of efficiency in supply chain we're going to see. Goods going into into warehouses, back to warehouses in the reverse supply chain. So lots more drivers of demand than there are, I think, risks of less space being needed. And certainly our JLL view is that take up of logistics floor space is going to continue to go up year on year from here on.
Yeah, and I think on the 3D printers, we're going to fill our warehouses with 3D printers for you to buy. And I think a lot of people forget that they talk about 3D printers, but actually 3D printers need materials to make from. So again, that's going to be another part of the warehouses will be full of that. So I'm not worried by it. I think people are using warehouses more efficiently, and automation and the management systems that are available means that you can get more through a single warehouse. But overall, the populations are growing. It's like Germany suddenly taking on another 1 or 2 million, is it 3 million immigrants? And that's fantastic for logistics. They still need to eat, drink. They still will be buying cars, taking transport. And everything that you touch, eat, you see, you wear, goes through a warehouse. So I think it's only good for warehousing. And that's what I'd echo what Tom says.
Hi, I'm Paul Darmy, also from Greater Copenhagen, heading the supply chain for the region. It's very interesting to hear about the Nordics. Obviously, it's our key interest for some odd reason. But thanks for sharing the insight about the different demand supply, which is we feel and see the same thing happening in our market. But if you pick a Nordic location, I know we don't have that many people in population, but if we add on, total Nordic is about 26 million, including Finland as part of the Nordics. And we touched upon e-commerce. We do have a very high spend in revenue online with the e-commerce. I read a report, we actually trade as much as Brazil, which would be not in terms of population, but like number 8 in the world. It's changing, I think. And our digital infrastructure is extremely high as well, online, smartphone, etc. So for us, it would be very interesting to hear your views to put up a Nordic warehouse. Where would the ideal location be? You do not need to be polite.
Well, the only place I've been to in Finland was, I think it's called Lappeenranta, so that's the only place I know. I think that obviously one of the problems you have up there is the distances between population, sort of Norway, Sweden, right down, all the way down to Denmark. I think Denmark's lucky because you are part of what I would consider the main section of Europe. Whereas if you're in the Nordics, slightly further up, then you've got bigger problems. I honestly don't know where the ideal place to put it is. I can see in the future that drones would work well in countries such as your own country, and certainly in Finland and places where there's less congestion and there's more areas to cover to get parcels delivered. So actually you could see you'll need some drone-centered warehouses up there more than you would in any of the central cities where the skies would be so busy they'd be either crashing all the time or thieves would be stealing all the time, shooting them down. That's just personal view though.
It's a funny story.
We're English, we're inventive.
Yeah, that's what I do the whole weekend. No, yeah, the drones is a good aspect to talk about. So there are some, of course, security issues to have to be checked, and I think we all should be aware that we have also some let me say politically situations where probably if a drone is flying around or flying into an arena or wherever. So I just want to make some horror pictures, but this is a big thing why I'm not a big fan of the drones, to be honest. And for me, the last mile logistics with the pickup stations very close to the clients, this is something which works already today, and this is so close. And I don't know if it's really necessary to in the internet to go on a website and expect that it is in 3 hours at home. So it's for food, okay, yeah, but is it necessary for everything else? So the question is if it's really for the humankind necessary to have this absolutely access to every product, everything in the second. This is something which is, of course, in something different in the supply chain and the industry. But for us as human beings, we should probably reconsider and reflect ourselves as this is a real need. But I'm in the real estate industrial business since 1994, so I'm 100% convinced that logistics will increase. It's becoming bigger and bigger. It's a full institutional product since a few years, and I think. Yeah, we have a disruptive effect to the retail sector. That's what happens. So we take more and more share of the retail sector, which was not so spoken today too much. But I think that the warehouses are the retail shops of the future. This is a nice, let me say, expression which I heard a few years ago, which is the truth. So all the stuff is coming out of a warehouse, and we are all, meanwhile, absolutely used to order the things through our PDA, iPhone, whatever, to our smartphones. So this is something which is it's not stoppable.
I'm going to do one quick one, which is what we always do, and which Ian never really fully answers, except to say we should invest in P3, and I'm sure he will say that again. But maybe we could start with where we think would be a good place to invest, and perhaps, Tom, if you give one good place as well in the Nordics to start with. How much do you think I should give him?
500 million.
Do you think? As much as that for Tom?
A bit more.
Okay. Yeah, 500 million. Where would you invest? But you've got to invest some of it in the Nordics.
Well, I was going to actually come back to the question on the Nordics. We're very busy up in the Nordics in terms of capital markets team advising investors up there. So there is investable stock there. Places like Gothenburg, Stockholm are markets, and the road that links them up are markets where you have a lot of logistics space, a lot of demand from tenants, and a big domestic market and an increasing international market for investment there. So it's always it's normally the fourth biggest investment market across Europe, and I think if I were to invest some of my money in Europe, I think the Nordics would be a great place to do it. Sweden on that belt, Gothenburg, Stockholm belt. I think I'd also want to go back to what I said before about sort of multi-let industrials, whether it's modern space or sort of secondary space in terms of age. I think as I said before, the spectrum of what people are investing in across the logistics sector is broadening, and I think as well as some logistics in the Nordics, I think light industrial, Western Europe, obviously the UK has been a big market for that going back a few years, but I think Western Europe light industrial is a market that we're going to see grow.
Okay, great. Jack?
I would look to invest that money in markets that demonstrate low political risk and are land constrained. So for the Nordics, that would be a combination of Gothenburg, Stockholm, and to a lesser extent Malmo. I still think there's a lot of value to come in Germany, in and around the big 5 cities. Yields are tight there, but I see them sharpening. I would want some Central European exposure, and I would choose the Czech Republic. Not because we're sat on Ian's boat, but just because I think the land dynamic is the most favourable in all of the major CE countries, and I couldn't resist investing into Madrid and Barcelona just because the land is so tight down there, and I think rents are going to move.
Okay, great. Umut, where would you?
500 million.
500 million. Where would you invest?
Last year we invested approximately 350 in Germany, and that's almost the size for our second fund, which is now in place. We have first investors who are interested to reinvest in the fund. So this is our second platform where we are very keen on that we will fulfill it or the expectations of the investors in the next 18 months, something like this, and then we open the helmet and look around what's happening in Poland and the elections are very important. France is extremely, so it's in the few weeks, so we have clarity more and more, and then we will see. Don't want to get currency risks into the fund, because probably you buy in euro, and then probably in a few years it's a different currency. So this is something, if the EU would blast off. So this is something we don't want to give this risk towards the investors. So in the second, I would say Germany still.
I can't believe you've waited till the end to say that.
Why?
About the collapse of the Eurozone.
No, we have to focus the reality, but these are fundamental facts which are super positive, which we all have talking about, but I don't see the risk very, very, very high, to be honest. I have it in my back, but I really don't believe it. After Brexit and Trump, I'm sure that the people are clever enough.
Okay, good.
I might say that after Brexit and Trump, I think we've proved the people are not clever. And my 500 million, a lot of it would go on inner city logistics. I think it's a new place, and maybe I'll save some to buy some car parks with you for the future.
Excellent, very good.